What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers up here on the left. We have the broad market comprised of SPY, the Qs, and IWM. After that, we look at some companies. We have Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. Lots of red across the board here based on Friday's selling action. We're going to go over some key levels to pay attention to, and I do want to remind all of you traders to remain open to trading both directions here. We gave away the one-on-one conference call over on Instagram, so the winner was announced there. If you missed it, go ahead and check out the account. It's at tradebrigade.co. It's also linked down below in the description. Also linked down there is the free swing trade newsletter where we give away 5 to 10 swing trade ideas every Sunday afternoon to give you some ideas for the week ahead. So if you're interested in that, all that stuff's linked down below, as well as the Discord where you can chat with myself and other traders in real time. Let's hop into the broad market. All right, we're going to run through our monthly charts since we did just close out and finish up the month of April, and it's important to just keep in mind the overall context of where we're at when we do close a monthly bar. So zooming out to the monthly, you can see on SPY, for example, we have a very small lower wick, very small upper wick. Nothing very bearish about this candle, rather quite bullish in my opinion. Very, very green bar here, closing at the highs, and no real push to the downside at the open either. One key thing I want you to pay attention to on all of these monthly charts is where we closed this month of April in comparison to the prior month. So on the SPY, it's in the top quarter of price action. So very bullish that we were able to push essentially from the lows down here all the way up and take almost back 75% of that move to the downside in just 1 month. So to me, again, this implies that we're not going to see any sort of major rollover to the downside. We could see some pullback, but based on the monthly chart, again, very bullish environment right now. Alrighty, so the Q's monthly chart, just about the same thing, but the key difference here, again, if we look at the one thing to pay attention to, it's where we closed in relationship to the prior candle, and we closed right at the highs. Rather than being in that top quarter or 25% like SPY, instead the Qs are much, much stronger in the sense that they closed at the highs of the prior month's candle. Again, very in even smaller upper wick on the Qs and a small lower tail as well. So nothing really bearish about this, nothing that would imply to me that we want to see a complete rollover. And lastly, IWM, the one that we knew was the weakest of them all. You can see, again, if we look at where we closed in relationship to the prior month's candle, it's much lower than the rest of them, but it's still over 50% to the upside. So although not as bullish as the Qs or SPY, for example, still quite bullish in the sense that we have a primarily green candle, as a matter of fact, a very green candle with an upper wick. Although it's larger than what we have on the Qs and SPY, it's still, in comparison to the overall size of the candle, not really that large. And our wick to the downside, again, buyers really stepping up when sellers push prices lower, and we have a wick to the downside, again, larger than what we have on the Qs and SPY. But again, in relationship to the overall size of a candle of this stature, they're really not that big. So to me, still bullish here on IWM. I think that the pullback based on what we have here and the relative weakness could be deeper and or longer. But overall, still a bullish environment on the IWM. Alrighty, so going back through for our daily charts and analysis, we did adjust our trend line here. It did look something like this when we had connected to our original anchor point down here, but we did adjust it for this week, moving it out to our new anchor point, which was here. And you can see that this week we did ride it quite nicely, essentially moving upwards, Monday, Tuesday, Wednesday, and then Thursday starting to break down below it. Friday, obviously, we had that big day of selling off, partially sparked by Amazon and their larger sell-off. Tesla might have had something to do with it as well. But overall, you can see we have respected that trend line quite nice, only breaking it now to the downside. And essentially what I'm watching here for is a move to retest our lows here at 275.17. The pattern that I'm looking to play out is this one here where we have some sideways consolidation. This is known as balance. And when we break out of balance, we can have a few scenarios happen. To the upside here, we had what we call a look above and fail, where we looked above and started to break out, but we failed and started to trade back into this area of balance, in which case our target is the lower side down here. So we're looking for a move down to 275.17 on SPY, and based on this candle on Friday, I think it's very well possible that it happens earlier on in the week. I'd say anything lower than the low of Friday's low, if we break down below it, then I would target a move down here to 275.20, which has been our key support in the past. If we go lower than that, we are prepared to continue on. And again, keep in mind that 50 SMA will coincide with that 275.20 level, so super support there. Intraday bounce very well could happen. But if we break down below, we're looking at 271.66, our double bottom from here. Anything lower than that, and we have 263.02. And then 256 just about. And again, that's quite a ways away, and that would be quite an aggressive pullback. I don't think that's necessarily what's going to happen. Again, I think we very well could put in a new higher low here at this 275.20 level. Again, keeping in mind that we have low, higher low, and then higher low forming here. We would be putting in a new one if we bounced around this level at 275.17, in which case, if we started to move back in the upwards direction, we're obviously retargeting this 288.20 level, and then our new resistance up here at 294.71, and then $300 pretty much whole dollar psychological resistance, also coinciding with that 200 SMA on the daily. So again, the move earlier on in the week is to watch for price to come down here to 275. From there, we will reassess what happens and either play the breakdown or bounce off of that level. Checking in on the Qs, you can remember just how much more bullish it was on the monthly chart, and you can see that's just, continuing to be that much more bullish in the sense that we didn't really gap down that far or break down that much more further on our trend line than we did in SPY. If you remember on SPY, there was quite a larger move to the downside below our trend line, whereas on the Qs, it's rather tight and right up near that trend line. So a bullish sign there. But again, I think the same pattern has the potential to play out here where we have an area of consolidation. We saw a fake breakout to the upside, a look above and fail, now trading back into this range, in which case our target is now back down here at 206.35. Again, that could happen very earlier on in the week, so watching to catch that move to the downside there, and then reassess whether or not we're going to bounce or break down and continue to the downside. If we do, we're covered. We have support at 203, which our 200 SMA will start to coincide with as we continue throughout the week. Anything lower than that, our 50 SMA is sort of in this area as well, so keep that in mind for an intraday bounce. If we continue lower, though, we have support at 198.30. Anything lower than that, and we have 192.50 if we want to play that to a round number. To the upside, if we start to bounce off of this 206.35 and this pullback happens, we set a higher low and continue on in the upwards direction, we will first have to fight back through our 214.50 resistance here. If we go above that, then we have our next level up here at 219.50. Anything higher, and we're going to be looking at 223.83. And lastly, we have IWM, which is actually, although it was the most bearish on the monthly chart, it is the most bullish on the daily chart. Kind of ironic how that happens, but I just want to point out that we do have a hammer candle forming here. We're still very much, above our support trend line, and we're sort of starting to bounce at a key resistance point here, at our support point rather, at 124.20 and our 50 SMA on the daily chart. We have a gap to fill above us here, so 127.20 to 130. Keep that in mind. If we start to fill that gap, there should be very little resistance up to this 130 mark. If we go higher, then we're looking for a move up to 136 and the weekly high that we just set up here. Anything more than that, and there's again another gap up here to be filled to the upside. That's at 141.01. And one more reason why this is slightly more bullish than the rest of our indexes that we just looked at. If we look at our sort of consolidation pattern that we were sort of looking at, there we go. We have our consolidation period, and instead of having the look above and fail, in which case we target the other end of the sort of area of balance, instead we had the look above and go, where we essentially doubled the range to the upside, even more than doubled the range to the upside, and now we're just sort of pulling back and tagging up to this sort of was resistance, the upper end of the box, and now it's going to turn into support. So to me, IWM, again, being a little bit more bullish than the rest, we have a hammer candle or lower wick forming here at a key support as well as 50 SMA. We covered our resistances to the upside, to the downside, though. If we do start to break down and follow the rest of the market, the Qs and SPY, for example, if those act as leaders and the IWM is going to follow, we have support coming in next here at 119.92, so 120, call it a whole number, and then our support trend line, which again, plenty of room to keep pulling back into it and still be in a bullish environment. We did not break down below it. Anything lower, though, and we're looking at 117.25, and then lower than that, which would essentially be a break of our support trend line, where we could potentially be at 110.73. But based on the candle here and everything that I've mentioned, I think, unless we start to follow the market and pull back harder, I think we want to see some sideways consolidation here and retest and confirm this as a support. If you've made it to this point in the video, I want to say thank you. You're obviously enjoying the analysis, so be sure to hit the thumbs up button. I genuinely would appreciate it, and I think the YouTube algorithm would as well. Let's see if we can get to 150 likes on this video. Also, be sure to hit the subscribe button and turn on bell notifications. That way you know every single time I drop a new analysis. So jumping right into Apple, I do want to point out that we got the breakout over our resistance trend line that we talked about in last week's video, so we'll get rid of that for now. But what we did have is an interesting Friday where we rallied hard all morning and then sold off throughout the afternoon. That being said, we did still close above our key support here at 286.46, so 286.50. But based on the upper shadow and upper wick that we put in on Friday, I think that the selling pressure is still going to continue earlier on into the week upcoming. It's also, coinciding nicely with our analysis on the broad market as a whole. So I wouldn't be surprised to see Apple continue pulling back, in which case we have support below at 277.83, then 273.41, and then in between here, and our next sort of key support is our 50 SMA. In order to see the uptrend remain intact and form a new higher low, we essentially want to see the pullback to one of these key levels. If we get back down into our 265.60 level, we run the risk of losing that daily higher low being set. If we break down below, again, we have our 200 SMA and 256.35 level to pay attention to, but we would lose that higher low formation. To the upside, if we see this hold, we obviously have new resistance up here at 294.57 and then 298.77. Anything higher than that, we're getting into our triple top from back here at 303.73, and then a gap fill level all the way to the low of this candle here, which is at 310.50. So Netflix also playing out as we anticipated based on last week's video. We did get the breakdown of our 414.40 support level, in which case we saw the quick flush to the downside to retest our highs in here. That being said, we've bounced off of them quite nicely, but similar to Apple and the rest of the market, we have this sort of gravestone doji, large upper wick candle forming on Friday's price action. That being said, newfound resistance up here at 247.67. If we can break up above it, which based on this candle, I don't think it's likely earlier on in the week. Maybe some sideways consolidation, if anything, in between this level. But if we do break above, then I think the next move could be a retest of the all-time high. However, again, like I said, based on this and the selling pressure across the broad market, I think the next move would be a retest of our low in here at this 393 level. So Tesla made a lot of people's week thanks to Elon tweeting this glorious tweet, which will be up on the screen now. Again, price just sold off based on that. And, earnings might have had something to do with it. If you were watching after hours, there was a huge push to the upside based on this gap up that you see here, but it was essentially filled the same day. Huge sell-off that day, and then Elon tweeting on Friday and essentially pushing prices even lower once again. That being said, we could see an oversold bounce start to happen on Monday here, just based on how beaten down the stock has been over the past 2 days. If you look at the red volume just increasing from Thursday to Friday. That being said, we have support below at 673.70. Anything lower than that would be the full gap fill to the high of this candle in here at 648.92. Sorry. And then anything lower, we essentially have quite a ways to go. Not very much structure in the chart below. That's to 558.57. Based on the intense selling here, I'm not saying it's necessarily going to happen, but based on the ranges that we've had, it very well could be in play. To the upside, however, if we do start to see that oversold bounce, we have resistance coming into play back here at 743. Anything higher than that, and we have some zones up here. I'm going to get rid of a few of these trend line or resistance lines. This one seems to be most important here at 773.32. Anything higher than that, and we have our 798.58 level, which was our sort of flat pressure cooker top up here on the earlier part of last week. So Alibaba also suffering quite a massive gap down on Friday. Going straight into our support zone here. So essentially, we have an indecision candle forming here, an equal sized upper wick as lower wick, very small body. So overall, this one for me is going to be a wait and see. We're at a very key juncture on the chart here. If we break down lower, we obviously have our 200 SMA upsloping, which could act as an intraday support. But anything lower really, and we're moving back down into our 186.57 support. To the upside though, if we do start to see some buyers show up here, we have resistance at our 50 SMA overhead. Anything higher than that, and it's, well, actually sort of coinciding with that 50. It's very close here. We have this 199.50 level, which was a double bottom, should be resistance trying to break up back through it. Anything higher than that, and we have our 202 level, and higher than that, we have our 207.50. Again, based on this candle, I think the move is to wait and see. So Facebook has actually shown some relative strength here. We did start to see that at the end of last week as well with the whole Zoom competition thing going on there. Obviously, earnings were good. Stock gapped up big, but we do still have a gap to fill to the downside. Based on this candle here, again, upper wick, it could look like sellers want to fill that gap to here, which would be at 197, just about, the high of this candle. Also our level back here as well. So very nice to see that if that turned into support. From there, we could move to the upside, still very far away from our uptrend line, so we're good there, not in risk of losing the uptrend at all. So any more support to the downside, if we see the gap fill and then continuation to the downside, we have 193.68, 200 SMA after that. Anything lower, and we sort of have this zone down here, very, very thick support zone if you're watching intraday there. Let's get rid of the upper one just for a little clarity here, and that's at 184 just about. So keep in mind 184 should act as key support if all those break, but to the upside, if we do start to see a push up based on all this relative strength that we're seeing in Facebook, we have resistance first having to battle back up and over this 203.63 level. From there, we have this 208, 209 just about based on the upper wick of this one here. From there, if we remember properly, there should be a gap to fill. Oh no, the gap was filled, I'm sorry. So the gap was filled here. Anything higher is essentially going to be a retest of the swing high up here to 218.36. So on Nvidia, tracking the Qs very closely, you can see that we've essentially respected our support trend line quite nicely, and then now first gapping down below it. We do have that gap, like I said, to be filled from the high of Friday to the low of Thursday. So from 291.91 to 288.71, keep that in mind. If we get into the gap, should be very little resistance there and an easy move up to that 291.91. Anything higher, and we have all of this resistance coming into play here at 298.73. If we can break out over that, quick double top happening here at 304 just about, and then our all-time high at 316.32. But based on the structure of Friday's candle and essentially what we think is going to happen across the whole market, I think the move is a move down here to 272.35. Anything lower than that, we have our 50 SMA starting to coincide with key support down here at 259.50. And again, now that that uptrend is broken, could very well be in store, a nice pullback here. Alrighty, so Microsoft is doing something very, very interesting that I think is kind of noteworthy. If we look at what happened at this high here, we have a hammer at the resistance point and then an inverted hammer to follow. From there, we then gapped down and had a red day the following day. If you look at what's happening right now, it's essentially the same exact thing. So we have a hammer here at resistance, an inverted hammer here. Let's see if on Monday we then gap down and have a red day. From there, we are looking at key support to be coming into play if we start to sell off hard in the morning. We have our triple bottom, almost quadruple bottom. This is slightly just below here at 171. Anything lower than that, and we have, continuing on down here, 168.11, and then 165.48, so 165.50 to play a round number. Again, that could very well be in place if this pattern sort of plays out the same way it did here. To the upside, though, we are covered. First having to battle back up through this 179 resistance. Anything higher than that, and you can see there's quite a little ways for Microsoft to run all the way up here to 187.75. And last but not least, in my opinion, what sort of kicked off the whole market pulling back on Friday is Amazon. You can see based on its earnings, we had this nice bullish day actually, setting a new all-time high, and then from there just gapping down absolutely massively and then continuing to sell off throughout the day. One key thing to note is that although we did dip slightly down below our key support, we did close up above it, and right now, again, this just looks like a massive bull flag to me. To me, again, if we draw out with our rectangle, we have something sort of forming like this, where we have sideways consolidation. There we go. So the move here is to either wait and see for a look above and fail, in which case we would see a move above and then a move back down to the other side. But however, now that we're at the downside, we want to be watching for either a breakout and break down, in which case we're doubling this range to the downside. So if we do that, price would want to come down to our next key support just about down here at 2086.37, or if we see the look below and fail, in which case we find support and don't really get any acceptance down below into this level, sellers can't push it down below, we will retarget the upper end, aka all-time high, essentially up here right around 2459.74. So keep that in mind. Very interesting consolidation period here. Nice bull flag in my opinion, but again, the consolidation could break out either way just because we are retesting the lows of this area. That's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, then let me know by leaving the video a thumbs up or a comment down below. Also, like we said, don't forget to subscribe and turn on the notifications. That way you're notified every single time I drop a new analysis. If you're interested in the swing trading stuff and the Instagram account and all that good stuff, it's all linked in the description down below. I wish you a green trading week, and remember, be open to all possibilities regardless of what the news is saying.